Well, hello and welcome to another edition of No Nonsense with Pamela Wallin. Today we are going to tackle the tricky issue of the capital gains tax, and maybe a little bit later on look at what's going on south of the border with all the new appointments and what that too will mean for us. But this focus on capital gains is really interesting. This was a move the government made to put it in the budget. They promised legislation would follow. It hasn't, so they're kind of retroactively imposing this tax. Nobody knows the legality of that, but we certainly know the impact of it because of people like Jack Mintz, the President's Fellow at the School of Public Policy at the University of Calgary, Distinguished Senior Fellow at Macdonald-Laurier, for many, many years headed up the C.D. Howe Institute, and just one of our brightest minds on all of this. So I've been reading all your messages and posts lately. Jack, wake up, Canada. We need to do some of these things. So we'll get to that. Let's start with this. Do you agree on any level, I guess I'll put it that way, with this capital gains imposition?
Well, I think partly it's an issue of timing. Like, I would have not done it at this point, not with an economy where per capita GDP has been dropping now for 2 years, and the gap between us and the United States has opened up, where American per capita GDP is now 50% higher than in Canada. So this was not the time to start looking at policies like this. There is a tax policy history behind capital gains taxes when it was adopted in 1972. And at that time, what the government did was it wanted to have parity between the dividend tax rate and the capital gains tax rate on when people dispose their assets.
Yeah.
So this would minimize tax planning and things like that. And so we had set the dividend tax rate at that time based on the small business tax rate, not the large company tax rate.
Right.
And so it actually we didn't fully integrate corporate and personal taxes, as it's called. Back in 1972, and that lasted actually, by the way, until 2004 or 5, if I recall, when we introduced 2 dividend tax credits, one for profits that were paid out of high tax income, and another for profits paid out of low tax income.
Okay, let's just back up a bit here. So what is the theory of a capital gains? Because it's different if you're Joe Citizen and you're selling your house and you bought it for $100,000 and now it's worth $2. And so you've got to pay a capital gains because you've made money. Why does that need to be taxed? Like, what is the theory behind that?
Yeah, well, the theory goes back to, the Carter Report and the argument that, we should tax all sources of income equally. The problem with capital gains, though, is that we only tax the gains when it's actually, when the asset is disposed. And so people can defer their gain until a later time, which is an advantage compared to, let's say, getting a wage from your employer or getting a dividend payment from your company. So there is this deferral advantage associated with capital gains. There's been lots of discussion in the tax literature about going to accrual capital gains taxes, but no country has ever done it because you can force people, if you try to just tax the gains without selling the asset, you can force people to liquidate assets, in order to pay their taxes. But also it's very hard to value assets without any market value for those assets until you actually sell the assets. So no country has ever tried to tax capital gains on an accrual basis. They only tax it on a realized basis.
So this is part of the problem with you. I don't know what your view is on this of the legality of this move at this point, which you put it in a budget, but it was just a declaration really saying legislation would follow. But then they signaled and said that you must pay this retroactively. We're going to come back and collect this tax once the bills are paid. So you had farmers and small business people running around in a panic, deciding whether they should hand the farm over to the kids or sell their dental practice and the building they're in so that they wouldn't get caught by the larger numbers. It seemed a really odd way to approach it.
Actually, I think it is a bit problematical, and I'm not an accountant
Yeah,
or a lawyer, but I know that there's a number of complex arrangements that you have to deal with. In particular, when you have trusts and all sorts of other types of
right.
mechanisms, and that's where actually, when you look at the legislation, it's very long,
Yeah.
and so there were some ambiguities that had to be dealt with, and I think the fact that the final legislation and regulations are not out, I think is a serious mishap in the sense that it does create some uncertainty for some taxpayers that are going to be not
Well,
sure.
and people made decisions. I mean, they literally sold property and did all of that when they might not have been retiring for another 10 or 15 years, but felt they didn't want to get caught.
Well, actually, if
This,
someone did that, they probably made a mistake because you may
yeah.
still be better off paying the higher capital gains tax rate if you're still going to hold an asset for 15 years. But if you're only expecting to hold an asset for a few more years, you would have definitely wanted to sell it, right away, like your cottage or, you
Yeah.
know, or your small business shares or whatever.
That second home. So let's just go through that for a minute because I had a question. These are questions I get when I come home to Saskatchewan. Everybody goes, "What does this mean?" Right? So if you own stocks, for example, and you might have a fund or an investment fund that purchases on your behalf, but and they're selling and buying stocks all the time. You're not doing that as an individual, but the person who's managing
Mhm.
your investments does, even the pension plan. How is all of that captured? Because you're making money one day and losing it the next.
Well, first of all, with the pension plan, there's no issue because the pension plan doesn't pay tax on capital gains, so
Yeah.
or RSP. So the assets are traded within your plan, and there is no impact on
Okay.
capital gains taxes in the plan because there are no capital gains taxes. In the case of people who have portfolios, of course, that let's say mutual funds, then that's entirely different. If the mutual fund starts selling shares, and there will be a higher payment for capital gains taxes if the shares have been sold by the mutual fund or by your portfolio manager. So yes, you can be caught, and you don't have much control over it, but you will be facing higher capital gains taxes.
Well, that's part of the problem. I mean, you could end up, you're not in charge of this. This is why you've got somebody else managing your retirement plan and then get hit with a tax bill that could be quite significant for some.
Yes, and it can be, and we also have to remember that the trouble when you start raising capital gains taxes, the government's there to share the gains, but it's not there to share the losses necessarily. So that say imposes more tax on risky assets, which is a concern, and then also it'll encourage people to lock in inferior assets for a longer period rather than
Yeah.
pay the higher capital gains tax rate. So there are some negatives associated with raising capital gains taxes, which can be discouraging risk as well as encouraging people to hold not as profitable assets in their portfolio because they want to avoid capital gains taxes. So it's not necessarily a great. There are negatives associated with this change.
Yeah, and as you say, it's not like they give you a tax refund if you've got, you know, poorly performing stocks here. It
Yeah,
doesn't work that way.
exactly. The government's not there to share the loss. Is it?
Okay, let's just go a little bit. You've written about this quite extensively. You say that this will reduce or could potentially reduce our GDP, our gross domestic product, the economic activity of this country by some $90 billion. It's going to reduce the per capita GDP by 3%. That's already a problem, and could cost as many as 400,000 jobs. So, do you want to walk us through that?
Sure. So, what there's two aspects to capital gains taxes that people forget about. One is the capital gains taxes that are paid by individuals, but the other is the capital gains taxes paid by corporations.
Right.
And actually, it's an amazingly unstudied field in tax policy.
Hmm.
amongst economists particularly. In fact, I've been scouring for the literature, and I've only come up with two articles, one relatively recent one that had anything on looking at corporate capital gains. And yet that's the big one, because all corporate capital gains are going to be increased in tax, where instead of the half inclusion rate, it'll be two-thirds inclusion rate, and there's none of this exemption for the first 200.
Yeah, and this is why they're in business, to make money.
Right.
So presumably,
So if you're holding, for example, private corporate investments, and your corporation has equity in it, it's going to be fully taxed, the capital gains. In fact, in some ways, you're better off taking it out. That's another issue that people don't talk about. But we had actually analyzed the impact of both the corporate capital gains tax increase and the one on individuals, taking into account that people tend to have what's called home bias in their investment. Canadians tend to hold, they don't hold fully globally diversified assets. They tend to hold a lot of Canadian shares, more so than they should. In fact, we estimate about 35% of their Canadian equities are held by Canadians, which is not exactly what you would expect in a.
but that's really interesting. Sorry, I don't want to get off track here, but I was surprised to read that in your work, that actually Canadians, whether how deliberately they do it or not, but they do support Canadian companies, and as individuals or even in investment portfolios, there does seem to be a bias, and so the impact is kind of a double whammy on Canadians, the citizen, and
Exactly.
the investor.
So what we did is we took into account both the increase at the personal side under this home bias assumption, and we also took into account the increase in the corporate capital gains tax rate. And we have a model looking at investment and the required rate of return. And when you increase capital gains taxes, it will raise, the required return that companies have to earn on their investments in order to cover these additional capital gains taxes. And that's when it can impact on investment. It can discourage investment when you do that. And that's where the 3% reduction in investment and per capita GDP came from.
And we've already got a productivity problem and a foreign investment problem and a domestic investment problem.
Right. And so when you actually reduce capital investment, which, as we know, in Canada has been very poor since 2015, we've had a very bad record of capital investment, except for residential real estate.
Right.
This is a real concern, because we're even driving investment further below. And so the estimate that we did is kind of like what economists will call a long run steady stated impact, in the sense that you have the economy at a certain point in time, you put in this higher capital gains tax rate, and then it'll evolve over time to this new steady state in which we have less investment, less employment, and lower per capita GDP. And that's what the model is based on.
So Company X has to account for all of this. So they're going to reduce investment in their own operations, expansion, perhaps opening another, operation or another mine. And then they're going to have to hire fewer people or lay some off in order to account for that. So that's where you end up with these numbers, like taking $90 billion out of the economic activity in this country and putting 400,000 people out of work.
That's exactly it. That's exactly right. And so it's not an insignificant number. Which I've always been of the view that in the past several years we really need some serious tax reform.
Yeah.
And I would have rather not change the capital gains tax rates at this point. I would have much preferred that we incorporate that part of a major tax reform. In the sense of, we have really high personal taxes as a country. And that's discourages investment and savings and work effort. And I think that if we're using the money not to fill the coffers of the federal government, but instead use the money to, let's say, reduce some of the tax rates that are far too high right now and that cause very significant impacts on economic growth, I would have much rather to have that kind of change in a tax reform.
So what is this about? It's kind of an easy, shorter term grab so governments that are heading into elections can keep spending.
Oh, exactly. I mean, it was a way of trying to, in fact, the delay of implementing it in June, as it was announced in April. Usually, governments, when they announce capital gains tax rate increases, it immediately goes in effect on budget day. This
Right.
one was delayed till June, which of course gave time for people to sell assets, and so then the government picks up more revenue that way
In the short term, they
in
got
the
a
short term.
cash grab. Yeah.
Although at the loss of the future, but they do
Yeah.
that in order to show a smaller deficit. We know that the federal government was, the Minister of Finance. She really wanted to make sure that the deficit wasn't that her announced deficit would not be more than $40
Well, they
billion.
didn't make the numbers anyway.
No, and in fact, it's not entirely clear they're going to get the revenues that they expected out of the
Yeah.
capital tax.
This is, I mean, that's even more cynical, really, than you expect of most governments who always put taxes in budgets on, the alcohol and the cigarettes and all the bad stuff. This was literally, we're going to announce it in April, um, impact by June. We're going to get that money because we think we're going to be out having to announce dental programs or whatever it might be.
All right. As if governments are never political in nature, but anyway.
No, I mean, I know they are, but this one just seems particularly odd. The other thing, and I guess we just have to put this in the larger context too, with what we're seeing just the other week coming forward from the federal government, the caps on emissions in the oil and gas sector, which most everybody believes is actually a cap on production because there's no other way to reduce the emissions unless you stop taking it out of the ground and stop moving it. Also, big impact on agriculture, obviously, a high energy use industry. So, and then we've got, of course, the carbon tax increase coming again 1st of April, and our indebtedness at record high levels already. Like this is, you start to put these things together. It's not a great picture for our day-to-day economy, nor is it attractive to foreigners who might want to invest in this country and in any sector.
Well, I think I think it's kind of getting well documented what our weak spots are and where some of our strengths are, and the various papers and work that has been done over the years on growth really talk about what causes growth in the economy. How people can get more incomes and more money in their pockets to spend,
Yeah.
et cetera. And there's three factors. One is their human capital.
Yeah.
And that's actually one area where Canada has done relatively well compared to a lot of countries, and that's an area of actually some strength for us as opposed to other countries. In fact, even the other day, somebody was telling me that they were starting a business up in Florida, and they found it was very hard finding people with the skills and willingness to work as you found in Canada. And
So we've got a ready and able workforce willing
right.
to work.
And that's a very positive thing for Canada, and that hasn't changed. In fact, our only concern maybe is to make sure that we continue having a good education system,
Right.
and not lose that strength that we've had in the past. The second is investment. The more investment you do, the more output and more incomes that people can produce, given the amount of labor force that we do have. And so that's why investment is absolutely critical, and that's been a huge weakness for Canada. I've done work in the past. I've been, for example, compared Canada to OECD countries, G7 countries, each of them, and Australia, because Australia is similar to us,
Right.
a resource-based economy. And we have really fallen on investment as capital, creation of capital, both public and private, and that has a real serious impact on on our ability to grow as an economy.
So what are people looking at when they make that kind of a call about this is not an attractive place? Is it all the standard stuff, too much red tape, too much regulation, too much uncertainty? Like what are the key factors there?
Well, I think part of it is we're a commodity-based economy, and of course we took a hit after 2015, and that did have an impact on investment. But it wasn't just that. We've also many of our other industries have been dragging, and capital has been leaving the country. It's been going down to the United States and elsewhere, and so that and so we've actually have lost I think in one number I estimated about $200 billion of capital over 5 years,
Wow.
and so we certainly are not attractive, let's say, in that sense. Money is, there is some money coming in for direct investment, but on a net basis, we've been losing more going elsewhere than money coming into the country, and so that's another issue. The third factor I should mention is kind of like what's left over explaining growth, and this is things like innovation, political stability, good management of companies, competition amongst companies, et cetera, et cetera. Excuse me. And there, Canada's has been good on, let's say, something like political stability, but it has been very weak on innovation. In fact, our patents per population is much lower than many other countries. Our research and development has been dropping for 10 years, and maybe even a bit longer now. And so we're not doing very well on the innovation front, not compared to, let's say, United States or some other countries in like Japan and Israel, for example. And
We've talked about that in a lot of our committee work in the Senate too, that we have kind of the wrong incentives for that, where we've got lots of money for companies to do startups, but we don't get them to the next level, at which point they just sell to somebody else.
right, so that's another issue, that we face. And then of course regulations. No question, they play a big role. It's been hard for anything to get built in this country, and not just oil pipelines. It's been other things too. And so whether it's even residential condos, people will tell you how much quicker it is to put up a condo in the United States compared to here. And so we're the regulations are getting in our way. And in the case of taxation, I think we did a pretty good job getting up to 2012 in terms of tax competitiveness, but we're starting to lose that, and particularly our personal income tax rate, the top rate, which is close to 53%, is third highest of the G7 countries. But we apply it at a taxable income level that's only three times the average wage. In Japan and France, is far more than the average wage. This is slightly higher than ours by a couple of points, or 3 points in one case. But like in the case of France, it's 15 times the average wage. It's a big difference.
Wow. Yeah.
And so we actually have very high personal taxes in this country relative to other countries, and I think that's another significant negative in terms of attracting.
I think this
people
is
wanting
why
to
all the movie stars that say they're going to flee the United States post Donald Trump take a look at the tax issue and say, oh, maybe not.
Well, that was said, and actually they found that not that many people.
No, exactly.
The last time, doubt that's going to happen this time. But we do have there are issues, and of course we know that there's been more people that have left the country. Trouble is, Canada does not have very good immigration data. We have immigration data, people coming in, but we have very poor immigration data, and so it's not been easy to kind of test. But one of the things which has been found looking at U.S. data is there are more Canadians moving down to the U.S.
Yeah, it is going the other way.
Numbers every year, but it accumulates and becomes a larger and larger number.
I do want to get your take on the immigration question, or the irregular immigration. We seem to be able to accommodate our own plans, but the government has jacked those numbers really quite significantly. Some of it temporary foreign workers, some of it students that may or may not be students, some of it people just kind of skirting the system by coming in as refugees or in some other category when they're not. The numbers have gone up. It's made housing unaffordable, put both healthcare and education at some risk. And now we're starting to see it, particularly in youth unemployment, that those numbers are going up.
That's correct. In fact, that's one of the points that I've made, that youth unemployment now is about 1/3 of the 1.5 million people that are unemployed right now in Canada. So that's a very, and that's between the ages of 15 to 24 years of age.
That's really troubling. And especially when it's young men and they have no way to kind of move forward or focus themselves.
Right. So I think, that is an issue, that, we know that we've, have had poor productivity being defined as, the amount of GDP we create per working hour. That's slipped over the past 4 years, actually even longer than that. It's been slipping, but we also are starting to see a reduction in the employment rate, which also lowers GDP per capita. So,
yeah.
And that's because of more people getting unemployed. The immigration issue, I think, has been horribly handled in recent years. We boosted up. We went way too far overboard, bringing in, a population, and then of course that pushed down wages for lower income and young people who were competing for the same jobs, and it also created all the stress that you mentioned in terms of housing and healthcare and education, etc. But now we're going the other way. And I think we got to be careful not to go too far the other way.
Yeah, with the cutting the numbers. Yeah.
Well, it's not just cutting the numbers. It's also the cases. So, for example, on the international student front, initially there was going to be an exemption for master and PhD students, but now they're included in the cutback too. And is this exactly what we want to do? And I mean, we need to a little bit more. We don't want to necessarily discourage the people that we really need in this country. We're still going to need temporary workers, and we're also going to need some international students.
The universities can't fund themselves. There's they need the money that the students pay, because it's 2 or 3 times what a domestic student pays.
Oh, exactly. But just leaving that aside for a moment, it's also from the point of view of the economy. We get we get a lot of people coming from abroad. They end up staying in Canada. They got very good skills, and so there's a balance, in other words, that one has to be careful of. And I think we didn't have a bad balance, in the previous decade, let's say, or prior to the pandemic. But then all of a sudden, this rush to grow the population, I think, has been a real mistake.
Well, and it's broken down that consensus that was there. I mean, this is a country built on immigration. We all are, of course, but we did seem to have a balance, and that the people came in who were coming in brought their work ethic with them and integrated quite well. And that doesn't seem to be the case today. As we watch the marches on the streets and the protests, that's very troubling.
In fact, that's a real concern, in the sense that we've had immigrants come to Canada, but they haven't brought their fights with them.
Right.
There were issues between, let's say, Sikhs and Indians in the past, but now we're starting to see, potentially there could be more, let's say, lack of integration and lack of, getting along, let's say, in terms of what.
No, and that puts everybody at risk when you see crime levels going up. Whoever it's initially targeted at, others are caught in that net. I want to just quote then, because of all the things you've been saying, I want to quote Jack Mintz to Jack Mintz. Wake up. Canada isn't broken. It's mismanaged.
Yes, that was an article. Well, because when you look at our past and you look at a number of things that we've accomplished as a country, there's a lot of good things that we can talk about, including one of the things I pointed out is that we're the 8th most Nobel Prizes amongst all countries, which is not bad. I mean, something to be proud about. So we have, as I said, we've had a good education system. We weren't like Argentina. We had the same per capita income as Argentina in 1900, and now we're far richer than Argentina.
Yeah.
And everyone thought Argentina was going to be the country of the future, and at that time, and it was badly miscovered and things like that. And I think on the whole, we've had fairly good government, but I think lately we have been slipping, and I think that's a very serious issue, and I think we need to right that, which I'm confident that Canadians will want to do that.
So when you say mismanaged, I mean, you can kind of read that both ways. Is it mismanaged because ideology is putting people down a road where it just doesn't work? Is it a level of economic ignorance on the part of those that lead us? Like, what are the factors?
I think my comment on mismanagement was particularly on management of policy
Yeah.
management by governments, and that has been the reason we're not doing very well lately, and it's it's creating expectations that are not there. We pick targets, let's say for climate change. We have no idea how we're going to get to them.
Yeah.
Have no idea the cost of doing it. So, in fact, that's my latest article. I've been writing just today, and I've been delving into that. The government said we're going to spend right until 2050, 125 to 150 billion dollars every year on climate finance, and that's huge. That's
And
you
to
know,
what end? I mean, we have admissions from the departments itself, the Environment Department, from the Parliamentary Budget Officer saying, we don't even know if this stuff works, and we're such a small contributor to the
exactly
global problem
one point
that
six percent.
it doesn't matter how radical our activity is, we're not going to actually impact that bigger picture. That's not a reason to do nothing, but it may be a reason to do what we're doing in a smarter way.
No, that's exactly right. And I think, for example, Canada can make huge contributions in technology. So,
Right,
maybe we need to think about why we're subsidizing everything to the
right,
hill, and spend less on subsidies, but really target the subsidies to research, to develop new technologies that we can sell to the rest of the world. And the other thing is that we still need to provide energy. We can provide energy to the rest of the world,
right.
especially our Western allies who need a secure source of energy, as well as something like LNG,
Yeah.
liquefied
And we need to
gas.
feed people. I just always kind of throw in the
Yeah,
agriculture.
we have to feed people too. But the main point is that these things. I think we also have to remember there's scarcity, and
Yeah.
there's only so much money we have. And if we're going to spend 120 billion dollars on each year on climate finance, that's 120 billion dollars for everything else. And of course, we also want good healthcare, and we also want to have good roads, and we also want to have all sorts of other things. And I don't think right now the public will be very happy to start paying 120 billion dollars more in taxes either.
Right. The healthcare comment just kind of triggers my what's going on here because I keep having this discussion in the uh, with the folks in the military community, which is we have so long been subsidized by the Americans and by other and protected by as well by other NATO operations. We don't even make our 2%. And the reason we have all these programs in healthcare is because we are subsidized on defense. If we had to really pay our fair share, we wouldn't have so much spending on all these other things, which seems questionable. Um, so we're watching President-elect Trump, move at lightning speed to fill his cabinet. And one of the appointments that grabbed my attention was Robert Lighthizer, the U.S. trade rep, will be back at the table. He negotiated the last trade deal. And it was a lot tougher round. And he's also going to be, in charge of the tariffs to a certain extent. So let's look at those two issues. What are the impacts of the proposed Trump tariffs at this point on us and just on economies in general?
Well, we'll have to see what actually evolves in terms of policy,
Yeah,
But if we take the idea that that Trump would like to put in a 10% or 20% tariff on all goods coming into the United States, no matter which country, uh, that will raise significant revenue for the
yeah,
for the government. And I think what people haven't appreciated that I know, and I've seen some comments by some of the Republicans in the past, that tariff revenue can help fund the continuation of the income tax cuts.
yeah,
And so it's not just it's partly to, of course, put up this wall, to make it more difficult for imports to come into the United States, and protect domestic industry. But it also has a revenue
right.
impact. In fact, if you go back 150 years, you'll see that many countries had a lot of tariffs, partly
Exactly. Yeah.
because it was one way to raise revenue to pay for public services. And so this is the first time that will happen. Now, when you have a general tariff like that, it's very hard for countries to start saying, okay, maybe I'll send my goods to Mexico, and Mexico will export into the United States because Mexico is tariff free. And so I think that's going to be, that's a harder one to avoid. In other words, now we don't know what goods and is going to be applied, by the tariff. Would the Trump government really like to tax oil exports from Canada? Our
Yeah.
biggest export is energy, actually, oil and gas, right now to the United States. Would he want to tax that? I think the auto industry should be a lot more worried
Yeah.
because I think that's where Trump and Lighthouser particularly would not be afraid of putting on a tariff on the auto industry.
And as I read it, they're also talking about basically this has a built-in escalator clause. So as long as the US is in debt and battling debt, this is just going to go up incrementally.
Yeah, that I didn't hear, but I think that
Yeah.
I wouldn't be surprised. And that
Yeah.
goes back to this revenue raising role of the tariffs, which is something that we have not seen for a long time. Now, he's also wants to put on the 60% tariff on Chinese goods.
Yeah.
Of course, that could cause a lot of diversion where, instead of goods coming directly from China, they end up coming from Korea and other countries. And that's, that does happen when you try to
And
pick on
then
one country.
what you're suggesting, though, too, is if people think they're going to get to the U.S. market through Mexico or Canada because we have this USMCA or CUSMA or NAFTA 3.0, whatever we want to call it, that's up for reconsideration beginning next year and the year after, and they may not be in the mood to be quite as generous as we have seen these negotiations be in the past.
Well, that's going to be a complicated issue. So, first of all, as I understand it, it will be decide whether to review it in
Hmm.
2026, I think it is. And
Yeah,
if they decide to do it, then it could be several years before you get a
right.
negotiation. There may be a new government in by that point, but we'll have
Yeah.
to see. Um,
So the timing is again important, as you say, when you think about this. I mean, that's kind of the sense that I've got that I mean, as busy as Trump has been in the last few days doing all this, when it comes to Canada, his feelings are pretty clear about the Prime Minister that he may just decide to wait it out on some of these issues and see what happens on the electoral front here.
Possibly, and that might be one strategy that he could try to pursue. On the other hand, when you look at something like supply management, which the
Yeah.
Americans are really peeved about, um, and Trump just winning Wisconsin, which is a big
Yeah.
dairy state, that may be something he'll want to move on more quickly because
Yeah.
even the conservatives federally have not shown that they're willing to move on supply management at this point. So
Yeah,
So,
the legislation, the current block legislation has basically been stalled because it's been, quote, amended in the Senate. So that means it kind of goes back to the other side again, and their time is running short on that. But still, it's a larger issue, that they have to deal with.
the other one is a digital sales tax, which is
Yes,
really
exactly.
from its nest
Yeah.
in the United States, and I think again, all these things could be problematical,
Well,
and
this is the
would
whole
Trump
issue.
want to wait to deal with these things? I'm not sure.
Yeah, I mean, it's a pretty basic one about taxing foreign companies in your domestic market. I mean, this is always on the table in any kind of trade deal with whatever country.
Oh, and there's also even another one that people never mention, and that's the 5% tax on streamers, which
Yeah,
are Americans, like Netflix and other Amazon and others that
yeah,
pay to the CRTC to then fund
yeah.
Canadian content, and that one also is it's already been put into place, but that one is also another irritant for
But
the.
the Americans raised the flag on that one too, and I think maybe they're just sitting there, as you say, biding their time a bit until it all comes onto the trade table, and then there's going to be some serious
Well,
pushback.
actually, the thing is that Trump does not have to wait for our trade agreement to put in
Right.
his tariffs. He can put in that 10 to 20% tariff. So
Yeah,
there may be a negotiation that's going to be required. He is a very transactional individual, and
exactly. Yeah.
back to the United States,
No, I think that's an excellent point.
and
I mean, that's where something may happen instantly. Yeah.
right, and he also has a lot of control over tariff policy. As I wrote in my article,
Yeah.
the, back in 1934, Congress delegated to the president basically the economic international policy,
Yep.
tariff policy, in other words. And the reason they did that was they felt that Congress, was always subject to all these lobbying by different industry groups, and they tended to like tariffs and the Smoot-Hawley
Yep.
Act in 1930, which helped contribute to the Great Depression. Congress in 1934 decided, okay, we'll give up this power because we think less lobbying will be possible. Little did they realize that, almost 90 years later, along comes a
The
president who wants
president.
to use tariffs as a way of protecting industry, but also,
Yeah.
as I mentioned, raise revenues.
It has already changed to some degree. Just I think even psychologically, this whole kind of rethink of globalization, which in the short run gave us all cheaper goods at the store, but shut down a lot of our domestic industry, which we saw kind of in pretty sharp relief during the pandemic. We had nowhere to get a mask or a vaccine or anything else because we didn't make that much anymore. We were importing it. Trump aside, although he's going to be a very powerful player on that, obviously, is that rethink much broader than people may be aware?
Well, I think that has been the line of thinking that he has used, and the Republicans use, and it certainly has been played a role in American politics. I think Canada, we have to be a little bit more careful because we benefit a lot from trade, and we have had lower consumer prices. And when you
Yeah,
look back at the time when China became part of the WTO and had all this growth,
yeah,
we've had a lot of growth. And why? Because our resource industry was booming.
yeah,
Of all the global trade that was going on, and so we actually benefited in many ways from this very strong world economy that was between the years 2000 and especially up to the financial crisis in 2008.
mhm,
And so and we were doing really well as an economy. Like Canada was growing great, and
yeah,
that was because of the booming resource sector. So it's more complicated than people think, and of course. Higher consumer prices and tariffs aren't necessarily going to be a boon to the economy because as we know, if trade shrinks internationally, then that could actually hurt all countries in the end.
And that's the issue again about our own domestic actions kind of cutting off our nose to spite our face when we put, emission or production caps on and, all of those things when we are the ones dependent on that and benefiting from it.
No, that's it. That's exactly right. And that's why, like in my view, that these kind of climate policies are actually the wrong thing to do because they
Yeah.
are going to be reducing the size, not increasing the size of our economy. And we'd be much better off if we took on policies that where we could make a real contribution to try to reduce emissions internationally, not our
Yeah.
little 1.6% of world emissions or 1.5%, and instead really work invest heavily in new types of technology. I mean, we could be leaders in carbon capture and storage. Who knows? Maybe we'd find new battery storage possibilities that no one is talking about and things like that. And
If
that,
we unleash the innovation side, yeah.
but that's where human capital comes in because we've had a lot of engineers that have been in the energy sector, and of course they have the skills that could be
Yeah.
shifted over to the clean energy side too. And I think that's you can't just start from the beginning. And so we have some advantages that we should be comparative advantages that we should try to take. We should try to use in order to build up our economy.
All of the things you've spelled out here, I'm going to end with Jack Mintz on Jack Mintz. None of this makes sense. How can a country that's been a great success for 150 years find itself stuck in the quicksand? You've given us some answers today, but we kind of need to pay attention. We really need some policy shifts here.
Absolutely. You won't hear me disagree with that.
Jack Mintz, great to talk to you as always. We're so thankful that people like you are there actually doing the number crunching and helping us get from point A to point B if we can use our common sense. Thanks a lot.
My pleasure.
Jack Mintz, President's Fellow at the School of Public Policy at the University of Calgary, but just like a constant writer, a contributor to the thinking process about that. And it's really, really important. So that's it for this edition of No Nonsense with Pamela Wallin. We'll talk very soon and probably soon enough with Jack Mintz again, too. Thanks, Jack. We'll see you soon. Bye-bye.